Yo, what's up, guys? In today's video, I'm gonna be giving you guys 3 things I wish I knew as a beginning trader. You know what I'm saying? But look, if I keep looking down, it's because I'm looking at my notes. That's all I'm gonna say. But look, and in today's video is gonna be 3 things I wish I knew, right? So number 1 is gonna be market structure. Number 2 is gonna be distractions. Number 3 is risk management. All right. So basically market structure, like a lot of people don't really understand what market structure is. And I be watching videos on YouTube, you know what I'm saying? Like, and I watch other people's trades and stuff, and I respect how they trade, but I feel like they don't understand what true market structure is. You know what I'm saying? Like they be going against the market, and I'm like, what are you doing? Why are you buying in a seller's market? Or why are you selling in a buyer's market? Like, it makes no sense, but it's their strategy and all. But you know what I'm saying? Like, I actually want to show you guys what true market structure is and how to really identify market structure and the flow of the market. And even if you might get faked out, I actually want to show you guys what it is, right? And then number 2, distractions. That's going to be a big one right there. And risk management. Actually, risk management I've been trading for about like a year or two or now, you know what I'm saying? But like true trading would be like a good like 8 months. I used to like stock off in the beginning. But overall, like it's true risk management. Risk management. Just like actually I didn't know what the fuck a risk management was. I didn't even I didn't really want to care about risk management. I just traded, and if I wanted to make money, I wanted to make money. If I lost money, then I was like, damn, I didn't know how to like calculate it. I was just doing my own thing. But overall, in the next video or in the next piece of this video, I'm gonna be explaining each and every subject. So yo, what's up, guys? So let's just get straight into market structure. So basically, the market really runs in higher highs, higher lows, and as well as lower highs and lower lows. So I'm about to show you guys right now how that looks. Let's make this a little quick, you know what I'm saying? All right, so when we're in an uptrend, price creates that higher high, then creates a higher low. Once price breaks this recent higher high, it creates a new higher high, right? So now, once price breaks this higher high, right, this point right here, price now has until this recent higher low in order for it to keep pushing up. So it can literally come all the way down to that recent higher low and then push up all the way. But sometimes, or like majority of the times, if it's not that big of a push, it might come down here, which then creates this lower high. Now, don't mind you, some of this might look like, like a head and shoulder type of pattern, but you gotta keep in mind too that we are in an uptrend. Well, in this case right here will be an uptrend, and then you could just draw your counter trend, right? So in this instance right here, you see price then come back down to that same area. It might still be respecting that same level of support or recent higher low. It might just keep respecting but still creating those lower highs, and then you might see a break of that lower high. So at this point right here, this would be your new higher high. After this, this would be like a minor higher high. So then you just see price create that higher low, and you might see price then continue to the upside, creating that new major structure of a higher high. Now, same thing with lower highs, right? So when price breaks, let's say boom, boom. All right, so this would be a lower low. This will be considered as a lower low, while this will be considered as a lower high, right? So once price then breaks that lower high or lower low, my bad, price now has until this recent lower high for it to keep dropping in that same direction. Now, mind you, price can do literally anything in here, right? It can do anything, literally. But as long as it respects structure, you're good. It can break support. Hold up, I'm gonna show you right now. So, without being an uptrend, but in this case, would be resistance. So let's say like right here, price came back up, create a level of resistance, right? Now you might see price then come up again. So my people be like, oh shit, I'm getting faked out. You're really not. You're just in this minor counter trend. So you might see price then break that recent lower high, which this right here is that recent lower high. I'm gonna just copy these, make it right. So then from there, boom, you're gonna see price create that higher low, and it's gonna keep pushing up to that recent lower high, and it might condense, make minor structure, and then once it breaks that level of support, bro, you good for sells. You're good for the overall sells. And that's literally it. Like market structure is simple. A lot of people make it difficult, but it's really, really, really simple. It's actually understanding time frame correlation as well. For example, we're on G right now, right? I have a great example. So like right here, overall, we're in this like minor downtrend, right? Here you see on the daily time frame, you see that price created this lower low as well as this lower high, lower low, lower high. Now this right here is a higher low. Why? Because it's not breaking this recent lower low. So once price does that, just draw your little trend line, boom, make it simple for you, right? Boom. Now you're gonna see that you're actually waiting for sells at this point because you're still obviously you're in this overall downtrend, right? But then again, you see a break of resistance right here, right? You see that break, you see price came back down, creating this higher low. So what does this tell you? Now price is coming to a buyer's market. So that's when you would draw your trend line. In this case, it would be a counter trend line, right? And you still have higher lows overall. And mind you, yes, it did break this counter trend line, but it's still respecting structure. Remember, market structure is number one, right? Market structure is number one. So this right here will be your new market structure. On the daily time frame, it looks a lot cleaner. You see your new market structure, your new higher low. So in this point right here, you just modify your trend line. Boom, you put it like right there. And then you see here on this point right here, price broke support. So then now like that's when market structure or just price in itself is transitioning to that seller's market. And right here you see that engulfing variation. Oh, my bad. Boom, let's put this yellow. All right, you have the engulfing variation that shows sellers. And then you have this. Price still hasn't broke this lower low yet, but it made a low. But on the other end, it's respecting resistance. So you already know that price is still in this seller's type of market. And then boom, you have you could have taken a sell overall and boom, like that's literally it. Like market structure is simple. Let me find you another example. Like right here. So you see price came back up. You have these minor, this would be, I wouldn't even consider this like a lower high. This would right here be a lower high. But then you see it break right here. You see those two candles. You see it break. You see it creating higher highs, higher lows, which are really minor. Then you see price came back down. You see then price created a level of support, which then got broken. And that's when everything just started going for sells. Pure lower highs. You see how it came back down. It came up to this recent lower high right here, right? And this would be the lower low. All of these are like minor lower lows. This would be your major lower low. Lower highs, lower lows, lower highs, lower lows, lower highs. And it's really simple. Like I'll go in depth later on, but for now, like it's literally it. Like right here. So these type of scenarios right here, these are kind of tricky. But at the same time, it's always understanding support and resistance, adding what's in your arsenal. So you see price here created this lower low, or it's not lower low, my bad, a lower high, then it created this higher high, and then it came back to this level. It looks like, yes, it looks like it broke, but at the same time, it's still respecting it. I don't consider these breaks because when there's two candles, there has to be two candles. For my strategy, there has to be two candles that are bearish, or in this case, it would have to be bearish in order to signify a break. All of these right here was not a break, because I bet you on a smaller time frame, so I bet you if we went on like on a 30-minute time frame, you see a price creating higher lows. Let's see where that is. All right, like right here. So you see price create this level of support, but at the same time you see price creating higher lows. This would be a high low right here, and it's created this level of support, which is still being respected, right? And then it just broke above, breaking this recent lower high. I'll show y'all right here. Boom. These two candles right here will show a break, right? So all of this right here was a break, and you see price came back up. All of these are like 23.6s, which is just a continuation of a trend. Later on, I'll go on fibs as well. While this is just true market structure right here. And you see price came back to this recent higher low, respected it, and it shot up. It's simple, but that's literally the overall gist of market structure. I will go later on in depth on how to actually read it and use fibs and actually support and resistance, trend lines, and all that type of stuff. But for now, actually understanding what market structure is really a key component for your trading strategy, and it's actually gonna help you a lot. Trust me, it's gonna help you a lot. But let's go on with the video. All right, so we got number 2, distractions. Distractions is really a big one, especially for trading, and it comes down to like I wouldn't say working. Like having a job isn't really a distraction. It's really a beneficial thing, because if you're on the charts and you know how trading can be, like it's really mental. So you always gotta give yourself a break, and especially like you gotta make money on the side. Like you have to have like your main income to even source your trading account and stuff, you know what I mean? But what I mean by distractions is like friends. From one of my things was like friend groups and just being around people. Be around people that actually want to push you, right? Be around people that actually want to see you succeed and not take away like your talents and your skills, you know what I'm saying? Like that was a big thing for me, like just being around people that weren't supposed to be in my journey, you know what I'm saying? And if they were, then thank you, like for the lessons, for learning, for future on. But overall, like if you know you have a distraction, if you know you got people around you that are like, no, let's stop doing that, or like just trying to take you away from your chart time, from you studying and doing what you want to do, leave. Because if they don't want to see you succeed, then what's the point of them you having them in your life, right? Like, no. And then another thing too would be like video games. Literally, when I first started playing, or when I first started trading, I literally sold my PlayStation. I was like, damn, like I'd rather be trading, learning, and actually understanding what the chart is, like understanding the chart and all that type of stuff, than just playing video games. Like, what am I getting out of video games? Unless you're making money. If you're making money from video games, you're doing good. But if you're just playing just to play and just, I know some people have it like as a hobby and stuff like that, but there's a lot of other things that you could do. Like you can read, you can like work out, like there's so much like actually like get your mind like mental level up, like spiritually, all that type of stuff. Learn about yourself. That's a really big component, especially too with trading. Like when I first started trading, I was a whole different person, and after me trading these months and years, bro, like I became I was truly disciplined within myself and how I trade in the markets and stuff, you know what I mean? And that's literally it. Like, don't let distractions stop you from your greatness. Don't. Because if you're letting them stop you, it's pushing you back more from your greatness. Let's say you might be successful next year, right? And if you let those distractions keep stopping you, you're holding yourself back. So you might be 2 years now from your success rather than 1 year. You know what I mean? Like, actually understand where your situation is and understand like what distractions are in your life and take them out. Right? Take them out. It can even be from like social media. Like, if you're just scrolling on social media doing nothing, what's the point of being on social media? You're losing yourself on social media, right? It's not beneficial to you at all. So that goes for distractions. The next one's gonna be risk management, you know what I'm saying? Yo, what's up? So in this part of the section, we're gonna be going over risk management. I would highly recommend, if any of you guys don't have it yet, but to have a funded account. It's really beneficial, really beneficial. So let's say you bought a 20K account, right? In that 20K account, you have a 5% daily drawdown. So you're willing to risk 5% per day. But that's not all. You're not going to risk the whole 5% of the account. That's because if you do, then you're just going to lose the account, right? So what I do is instead of trading that 5%, I do 1.5% of the account. Why? Because if I lose 1%, 1.5% of that account, I can still take 3.5 more trades, even though I'm really not going to take the full 5% on that one day. But I'm just saying, like, you can still take, if let's say you lost 1.5% of that trade in that one day, right? You can still take another 1.5% of your account, and you'll still be at 3% overall. So you're still maintaining your account, right? You're still maintaining your account, but you're not damaging it. And let's say you make a profit of, put that back. Let's say you made a profit of 3%, right? Now you're back at break even. And then let's say you make another 2%. Now you're up 2% of your account. Right? So it's like you're managing your trades, you're managing how overall you're doing your trades. So the more trades you take, the more you make, the better percentage you are at achieving your account, like just not getting funded, but more like actually just getting funded, actually completing your evaluation, or if you got accelerated, then like actually like maintaining your account, not going in too much drawdown, not losing your account, you know what I'm saying? And this is really one thing I wish, because like I remember in the beginning, I hated percentages. I really hated percentages, but I actually like it now. Like, it actually helps me a lot, like actually maintaining my trades and actually understanding where I am in my account, not just in the markets, but actually in my trading account. And yeah, that's really it. Just don't trade too much of your account, because you're not supposed to be too greedy. I know that this market can give you a lot of money, you know what I'm saying, but like, let's not be too greedy, you know what I'm saying? You can still make good money, more than good money in this account, but that's all I'm gonna say. And as well, another thing too. So let's say you have this 20K account, right? And let's say you completed it. Now let's say you're making money from this account. Now you can fund yourself another account. Let's say you can fund yourself a now 100K account. You see? So then now you're making more profit than you were in that 20K account. Let's say you make more profit on that 100K account. Now you can buy a 200K account and then stack it. And then that's just how you keep doing it. And that's literally the simplest route to take. Get a small account, a 10K, 20K account. Get funded with those two accounts. That's if you don't have the capital to buy, like the bigger accounts. But like, let's say you have those accounts right there, boom, and you're good. Just make profit. save some extra cash, and then boom, buy a 100K account. And as well, you know, make your own personal account. But overall, like, this is really a simple method. Like, it's really, really, really simple, and anyone can do it. Right? So that goes with the video. I hope you guys loved it. I know I feel like it was kind of quick in a sense, but hey, it's all good though. It's all good. I hope y'all like, subscribe, comment, and let me know what ideas you have, what you want to know about the market. I will do one-on-ones for free. You know what I'm saying? I'll do one-on-ones for free for like 30 to 1 hour, like 30 minutes to an hour. But I'll holla at y'all later.